Hi, this is Joe Rabil with Invest Like a Pro. I want to talk a little bit more about MACD and give a little bit more detail in terms of when the signals are really useful and sometimes when you really want to wait for a better entry. The goal for me in using MACD for the most part is to try and improve my entry, improve my risk, and improve my timing. So, there are times when it will actually help you to prevent from taking a trade if you were just using price as well. So, I like to use it in conjunction with price, but there are a few factors that are real important. So let's go ahead. I'm going to go into the example for today. But first, let's go ahead and hit that like button. And if you're not a subscriber, please hit the subscribe button as well. So this stock is Conoco. I've got a weekly chart up. And we're going to start on the left side. And we're going to go through all these different signals in terms of MACD that took place. And, I want to make sure you get a real good idea of when these signals are, I believe, to be really useful and give you an edge, and where there are times where you kind of have to wait for an alternative signal. So if we start here, and you notice MACD was down, turning down, and it overran the zero line. So here's the zero line here I'm focusing on with the cursor. So, that level, once it gets overrun like that, you have to be a little bit more careful about the type of signals you're looking for. As you know, if you've gone through any of my videos, most of the time when I'm looking at MACD this way, I'm also looking at the higher time frame. I'm not going to go to the monthly chart to show you this, but I do want to make sure you understand most of the time if I'm looking at a crossover signal like this where you come underneath the zero line, I'm usually looking at the higher time frame to see if it's worthwhile. And if it is, I'm going to still use the signal even if there's a little bit of, especially if there's a little bit of distance between where the MACD is and where the zero line is. I'll get into that a little bit more in a second, but if you notice, I've got the arrow pointing right here. Let me do this. I'd rather make it look this way. So there's where the arrow's showing in the day of where the trigger took place. And, that to me is a very powerful signal. This is how you improve your timing. This is actually how you can lower your risk and enter, to me, an entire day earlier than you would have if you were just using price alone. Because if I'm using price alone, I'm probably waiting for this downtrend line to be broken. And I'm either waiting for it to close above the 40. And if that's the case, I'd be waiting for this bar, this next bar. So what MACD does as an alternative, it gives me the opportunity, if I'm using it, to get in on the cross of the 18 and the close above the 18 as opposed to waiting for the 40 in this instance. So this to me is an example of a MACD crossover that I think is pretty powerful. If we follow the signal, follow the MACD from here, I did want to point out that if you didn't catch this signal, you could have taken a pinch play. These two lower highs clicked in, and you saw the little pinch in the MACD relative to its signal line. So that would have been another entry pattern. And then after that, we made a new high in price, and we made a new high in MACD. So when I see that, I mean, again, I'm not looking to take every single crossover. So yes, this was a crossover here to the downside, but to me, we're looking at an uptrend in price, and moving averages are going to the upside. So I'm not really, and I guess, again, you have to look at the higher time frame to recognize that you're in a bigger uptrend as well. So I'm not necessarily, if MACD confirms and we make a higher high and there's no momentum divergence in place, then I'm not really interested in playing these downside crossovers. So I just want to make sure I pointed that out, and that's the reason why I didn't even put in a downside arrow. What I wanted to point out, though, is when this finally turned around, and there was really no interim signal unless you went down to a daily chart. But if you were just using the MACD and you waited for the crossover, it was way up here. And so we're talking about a move of 3 to 4 days to the upside, and pretty good price movement to the upside, and then you get the MACD crossover. For me, this just isn't a signal that I'm not. It's not really offering me anything that's an advantage or an edge. I'm hopefully have used price in some way, shape, or form down on a daily chart to get in this, down in this zone as the move is starting up, instead of waiting for MACD to click in way up here. Now, it ended up moving higher, but I'm trying to point out where I think it's an advantage and where it's really useful, and not necessarily whether it helped you, whether it was right or not. In other words, whether it would have created a winning trade or not. So if we follow this up, now note what happens. I actually point out the divergence in MACD. And so once we get the divergence in place, now all of a sudden we get a downside crossover, and it's day one. Now, it's a huge day to the downside. I mean, that's a big down bar. But for me, because it is showing momentum divergence, and it is day one to the downside, it was the first day down, I would consider that a good signal. I would say this is giving me an edge because it's before the break of the moving averages, and really, even if I had a trend line in place, it would be giving you a signal prior to that. So again, it's the type of thing where if you're taking other things into account, I think you can use these MACD signals as pretty powerful tools to give you an edge. If we follow along, now it starts to get a little bit more interesting because we have a downside move and then we get a crossover to the upside, but it's right underneath the zero line. And by the time we actually get a crossover signal, the MACD is literally bumping its head on the zero line. So when I see that, I'm a little bit more tentative. Whereas if we go back here, when you got the crossover signal, it was below zero, but I had a couple days worth of room before you were going to hit the zero line. It wasn't hitting at the day of the signal. And in that case, I probably would be more aggressive on this signal. And on this signal, I actually might wait for a pinch play to develop. And what happened was, instead of really developing a nice clean pinch right away, it had a really violent red bar to the downside. And once that happens, then I'm just saying, all right, I'm going to wait for another recross or a cross back above the 40 before I'm really going to be interested. So in this case, based on the price action and the location of the zero line, I'm just not going to get pulled in based on a zero line, a moving average MACD crossover. So the thing you have to understand, the way I look at MACD is I use it in a subjective manner. I'm not sitting back and saying every time it crosses over I'm going to buy, and every time it crosses over to the downside I'm going to sell. I just don't use it that way, and I really advise you not to as well. Take other factors into account. See if it makes sense from a risk-reward standpoint. Now, when we got the crossover to the downside, which took place a few days later, it was inside of a really tight trading range. We had the big red bar down, and then we had 1, 2, 3, 4, 5, 6 sideways bars. And at the time the signal came, we had 5 inside bars inside of this big red bar. So once I see that, I'm not going to just take the MACD signal to the downside, even though it's early. I mean, it's right near the moving averages. It's actually a pretty good quality signal from a MACD crossover standpoint because it's not stretched away and it is early. But since when we're sitting in a range like this, I'm going to actually wait for price to cross down through that dotted line and take out the low of this big red bar in this trading range. That to me would be the signal, and I would not wait for the close on that because I already have MACD confirming to the downside. So that's how I would use price and MACD together in this instance. And then we actually had a really nice pinch play. If you notice, the MACD pinched down towards its signal line. We had 1 higher low, 2 higher lows, 3 higher lows, and when we got a pinch to the downside, a pinch signal to the downside. So let's go to the next signal, crossover signal to the upside. And if you notice, it actually took place on this bar right here. So after a move of 1, 2, and a third day, which was a big gap, 2 back-to-back gap days, we finally get the crossover to the upside. And when that happens, I'm just not that interested in jumping aboard that late. It's too far of a move. I mean, yeah, there might be times where it carries to the upside, but I'm trying to play percentages. I'm trying to play the probability game. Technical analysis should be a probability game. And I'm waiting for another signal to take place, and it ended up happening and giving me a really good alternative entry with a pinch play a few days later. So now let's go to this next signal. I want to make sure you have a clear understanding of this because this was another downside crossover right above the zero line. And in this case, if we zero in on what happened, there was some room. I mean, you could have done it. It's similar to this here as opposed to this one. But let's just say you're looking at this saying, you know what, this is a little too close to the zero line. Well, there was an alternative entry, and if you notice, I drew in a little mini uptrend line because that shows the two higher lows. I mean, we did develop into a little mini pinch play right after the crossover to the downside. Now, there is a factor here that I think is pretty important. This was happening right in the area of the moving averages. So where this signal was as well, I mean, it's very possible you could have been sucked into this move to the upside based on the fact that it was near the moving averages. It wasn't overbought or anything like that. And there was a little bit of air to the upside on the MACD, but by the time it actually triggered and really showed up, to me, it would have looked like it was a little too close to the zero line. So in this instance, again, if I go back and look at this, I could see how this could be construed as a buy signal. And I don't have a huge problem if you're taking this signal, again, because you're not that far. You're really caught right in the midst of the moving averages. And the same thing holds true here. You could have taken the crossover to the downside, but I think a better strategy, and the point I'm trying to get across on these, is that I would be waiting for the pinch play. Now, in this case, you actually got a gap down, so it would have been a little bit more difficult trade. However, even on the gap down, I would be having a stop right here, and the stop would have been a lot less than putting on the zero line crossover. I mean, the MACD crossover signal with a stop way up here. So again, it's always looking at risk reward. Make sure you understand what the risk reward is, and sometimes you want to use the alternative entry. If we look at the last two entries, really the crossover here and then the crossover here, in both cases, they just, to me, are not good signals. They're not giving you any real advantage in this instance, simply because by the time the MACD crossover takes place, you're already up 4, 5, 6, 7 days in a row, or significantly off the bottom. And then in this case, you had 3, 4 days to the downside and then finally get a signal. So in both of these cases, I'd probably be looking for some type of alternative entry. And I guess that's sort of the key and really the premise behind this whole video. There are times when you want to use the MACD crossover signal and use it in conjunction with price, and use it in conjunction with, you know, other signals, the zero line, the MACD divergences, that type of thing. And I think that it'll add a lot, you'll add a lot more power to improving your timing, improving your risk reward, and that type of thing when you use MACD this way. All right, we'll talk to you soon.